So welcome everyone to another one of our Disrupt online or digital events. Today we have Hendrik from Finoa, Boris from Bankhaus Scheich, and Michael from Cashlink present together on a joint project around tokenization. The title is, as very pointedly formulated by the Cashlink team, Enough of the Theory, Tokenization in Practice. Before we jump into this exciting topic, just a quick point on logistics for those of you who've never joined before. The questions that you want to ask, you can post them in the WhatsApp group that accompanies this event. You can find the link in the Zoom chat here and in the email you received from Eventbrite, where there's also the Zoom link in there. There's also a WhatsApp link. Just click on it, join, and then you can post questions anytime. All three speakers are in there, and after the 25-30 minutes presentation, they will have a look and answer all your questions that you post in there, or I will read them out as a moderator. So that's it from my side, actually. I hope you enjoyed this talk, and I'm looking forward to an interesting discussion afterwards. Thanks a lot, and off you go, Michael, Hendrik, and Boris.
Yeah, thank you very much, Jan, for the nice introduction. So we're very happy to have a virtual talk today about our joint project with Finoa, Cashlink, and Bankhaus Scheich, where we tokenize the first DAX share, telecom share, and we're going to explain the steps, how we did it, why we did it, and we'll have an interview with the board member Boris Ziganke from Bankhaus Scheich at the last part of the session, where we're gonna get more insights about how is Bankhaus Scheich transforming their businesses, what are the new opportunities Bankhaus Scheich sees, and what were the first-hand experience from this tokenization of the DAX share. So before jumping into our slides and the steps of the tokenization process, and we're going to introduce us to you in a very short 2-minute introduction per each party. So I would just hand over to Hendrik to introduce Finoa and himself.
Yes, thank you, Michael. So we are Finoa. We are a Berlin-based financial services provider for digital assets, mainly focusing on professional and institutional investors. We are working on the post-issuance side of the digital asset lifecycle, where we provide, on the one hand, custody services on digital assets, which include both security tokens as well as classical crypto assets such as Bitcoin and other cryptocurrencies. And we also serve our customers with other financial services on digital assets, which include, for example, staking services, as well as now tapping into the whole trading and liquidity part, where we partner with OTC and brokerage platforms to also provide liquidity to the portfolio that the customers of Finoa keep within their digital asset account, which is in the classical financial system very close to a custody or depository bank account, where you keep your digital, then fully digital securities within Finoa. Maybe Boris, do you want to take it over?
Yeah, I'm Boris from Bankhaus Scheich. We're a security trading bank based in Frankfurt and Munich. We do market making at Frankfurt Stock Exchange. And besides that, we're a pretty large bond trader in Germany, OTC market. And our capital markets division is based in Munich. We do all services around trading. We're founded 85 as a stockbroker, and managed to grow over the last 10 years. Not like our other competitors who had pretty tough times for banking. We managed to grow, and I think the main reason why is that we are privately owned, and that we're like a speedboat compared to all to many other banks. And my colleague from the board is 100% owner of the bank, so we got very short ways, very short decisions, and that's how we ended up being the first to tokenize the security together with Michael and Hendrik. And we had that was a real nice journey. which led us where we are now. Like
Yeah.
being,
Anything to add, Boris?
not really. I think that should be fine for now.
Okay, perfect. Yeah, as you said, what we are seeing, especially this year, is that the adoption of tokenization and the transformation of the capital markets is growing a lot. So I think the whole ecosystem needs players like Bankhaus Scheich, who are speedboats and who can be early adopters in this new ecosystem. What we are seeing not only in Germany, not only in Europe, but also in the US and in Asia, is that DLT or blockchain technology is going to completely transform the capital markets we have right now. And what we're seeing is that the tokenization can lead to dramatically reduced costs. It can lead to completely new business models. And of course, like we're going to show you in the presentation right now, it can especially completely disrupt the clearing and settlement processes of the traditional systems. So first of all, I'm Michael. I'm CEO and co-founder of Cashlink. In Cashlink, we have also a Frankfurt-based fintech startup. We help companies, or we enable companies to issue and manage the security tokens or digital securities. So we help to really improve the settlement, clearing, and issuance processes of securities. We have already issued several digital securities in Germany according to German law. For example, profit participation rights for German GmbH companies. So we issued digital company shares in a way you can call it. And we also did the tracker certificate with Bankhaus Scheich. And we can also provide technical frameworks and a technical infrastructure with our tokenization as a service solution for different kinds of assets. So this can be bonds, this can be profit participation rights, this can be certificates, and the underlying assets can be private or public assets. And our offerings also include private placements and public offerings to be completely issued digitally. We are venture capital backed by, for example, the FinLab AG, also from Frankfurt, and we are now really moving forward to give the issuers a complete all-in-one end-to-end solution to issue the digital securities in a very compliant way on our proven infrastructure. So let's start. Like I just mentioned, the market situation, capital markets 2.0 is here already. The transformation has started, and it's if you look at all the different markets worldwide, it's not a question about will DLT systems transform capital markets. It's only questions about when and how, of course, and which players have which role in the new systems. Together with Finoa, we are now conducting a study where we compare the traditional security system with like a tokenization-based digital securities infrastructure, and where we combine the pre-issuance, issuance, post-issuance, and trading processes, where we have the costs from the digital world and we have the costs from the let's say new world. And if you look at here, you can see, okay, we have really great improvement in the post-trading processes, in the issuance processes, in the clearing and settlement processes, because they are going to be radically transformed. And therefore, you can save up to 40% of costs over the complete digital asset life cycles. And we are also seeing that new opportunities are emerging. For new players are entering the market, new players are adopting the market. And if you're interested in our study, we are going to publish them in a couple of weeks, where we go deeper into the different steps and how these different steps will be transformed, and how issuers and other market participants, for example, also investors, can profit from this new system, and also what are the effects of, for example, on CSDs, what are the effects on brokers. And so that's why I think 40% cost reduction is not a minor improvement, it's a really major improvement, and it will completely change the system, especially when we're talking about Euro on-chain. If we're talking about on-chain settlements, this is going to be the next step in capital markets right now. This will additionally, for me, this is kind of the magic. This will be the next game changer when we have complete on-chain settlements. We don't have any more counterparty risks. We have atomic swaps. We can exchange an asset for a currency or an asset to an asset like in a second. So we have great improvements also on the counterparty risk side. Also, if we're looking at tokenization, adding on these cost-saving aspect, like I just said, we have the instant settlement. So the existing processes, which are often still paper-based, if you look at the CSD processes, or if you look at very like the securities which are issued without CSDs, it's still completely paper-based. And now with blockchain, we can increase the speed of the transactions. We can reduce the counterparty risk, and also we can transform this paper-based process in a fully digital process. Of course, and when you're talking about tokenization, it's all about making illiquid assets liquid. So we're talking about real estate, we're talking about art, we're talking about the whole private market, venture capital funds or other only private funds. And with tokenization, we can reduce the ticket sizes. For example, now you have a lot of funds which require a ticket size of minimum 200,000 euros, or you have real estate, which is just an asset which is not easy to buy if you only want to invest 1,000 euros. And this fractional ownership increases the access from a lot of players, especially retail, into the market, into the private market. It's opening up the private market, and therefore we will see a lot of more efficiency in the whole market. And of course, this will increase the economic value of everyone, because now the whole system gets just more efficient, and the exchange of value gets more efficient. Another also very important topic is global transferability. If you look now, if you want to transfer your security from Germany to the US or to Japan, it's a very complicated process. It takes sometimes weeks to transfer or to send your security to another jurisdictions. Using blockchain technology, we can have a 24/7 access to liquidity. We can have a completely global transferability because it's all connected with the decentralized systems, and even if we have different blockchains or different decentralized systems, it's very easy to integrate these systems. It's way more easier than if you look at the systems right now. Also, high transparency. If your security is stored in a decentralized system instead of a centralized system, the transparency is way higher because it's decentralized. Everyone can look into it, and therefore this leads to more trust between the market participants, and therefore also reducing the need for regulation and trusted parties. In the end, we still will need trusted parties, and we still need regulation. It's a very, very big topic, but just by using a decentralized system, we have a higher transparency. So like I just said, we tokenized the first DAX share on the blockchain. So what did we do here? We used an already public traded share, in this case a Deutsche Telekom share, because we wanted to have a real example of the old world, let's say. And we took these or these real shares, and we put them into a tracker certificate, and then we tokenize the tracker certificate. We also, of course, have an ISIN, as most of the digital securities now have an ISIN, and therefore we created an asset-linked token. So we have a token that is linked to an underlying, and this underlying asset is a real DAX share. So the process of tokenizing a DAX share is pretty simple in this case, because you have something in the middle, like it's now called for now a black box, and you have the real DAX share on the one side, and you have the token which represents the underlying, the DAX share, and the rights of the underlying in a token. Cashlink was completely responsible for the issuance and the structuring of these securities, and Finoa is responsible for the custody of the digital security in this case, because it's now focused on institutional clients, as Bankhaus Scheich is focusing on institutional clients now, maybe later also for retail. What's also very special is when you tokenize a DAX share, the first purpose was not, okay, we want to have everyone investing in the telecom share. For us, it's a pilot project to show, okay, how we can do it, and to build a standardized legal and technical wrapper, so that Finoa and Cashlink and Bankhaus Scheich can now issue any asset and represent these assets as a token. It even doesn't matter if it's publicly or private listed, because the whole process is now standardized. And for us, it was a huge success to tokenize a DAX share, because this shows, okay, tokenization is nothing people talk about. It's something we already do, we can do, and we have a lot of more projects in the pipeline, which Boris Ziganke will talk about later. So looking at the value chain of tokenization, tokenization is a very complex process, and therefore involves several companies and several players in the different steps of the value chain. So of course, also comparing to the traditional world, we have a pre-issuance phase, where we set up the legal framework, where we set up the regulatory setup, where we maybe need a prospectus, and where we all do the legal structuring. This hasn't changed to the old world. It's the same process. It's just a different product. So in this case, Ashers, also from Frankfurt, supported us by structuring and designing the legal documents for the tokenized security. Then we have the issuance process. In this case, this is our role of Cashlink, where we create the token, where we create the smart contract infrastructure, and where we enable investors to completely digital subscribe to the token, and where we then do the token distribution, so that after having successfully subscribed for the security, security is minted in this case, or distributed in your wallet or in your custody. So then here the issuance in the old world, you have a CSD and you have a CSD, and you have a central security depository where the security is stored. In this case, the security is stored on a decentralized layer, in our case, Ethereum. Right now, most of the digital securities are stored on Ethereum, but we also see, of course, other blockchain infrastructures right now, also private blockchain infrastructures for digital securities. But globally, Ethereum is the network which has the most traction of digital securities right now. I think it's not predictable which underlying DLT system will be taking over the market, or will have the biggest market share here. Let's see in the next 5 years. Right now, I think Ethereum is a very good way to go. And then we're moving over to the post-issuance process, like Henrik just said. So this is compared to the depository bank. So the tokens which have been created in the issuance space are now minted into the Finoa wallet. And Finoa is completely responsible for the post-issuance processes and for the custody and management of the securities from an investor perspective. So Cashlink focuses on the issuer perspectives and also handles corporate actions for the issuers. And Finoa then now completely, in this case, handles all the post-issuance processes for the investors. And when then, after the securities completely minted into the Finoa wallet, Bankhaus Scheich, which has now here two roles. Bankhaus Scheich is on the one hand the issuer, because they issue the tokenized DAX share in this value chain. Bankhaus Scheich is now also the future role of the future role in the digital asset ecosystem, but the role they have been maintaining for 100 years is trading and market making. So of course, everybody's talking about liquidity, and we think what we have experienced also in this project is you can have liquidity in the form that you have some secondary marketplaces, but of course here you can also have liquidity, but in the form of market making. And this is what Bankhaus Scheich is providing here. So Bankhaus Scheich is providing a way to buy and sell the securities at any time, completely technically integrated in the Finoa and Cashlink infrastructure. And so you have the full value chain of tokenized security. Of course, you've also some other players involved here, but this is, we're now here focusing on the main steps of issuing and tokenizing digital security. So coming more into our part, now the structuring and the issuance of the digital security. What's very important if you tokenize the security, you need at least 2 documents, maybe you need 3 documents. Right now in Germany, it's not legally allowed to transform or to tokenize the ownership of an asset, the real ownership. We still have notary services, and for example, and we can tokenize the ownership of the asset. But what we can tokenize is that we can transfer the rights of an asset or the rights of a contract. So what we're basically tokenizing is that we have the rights of the contract, and everyone, which is represented by a token. So if I transfer the token to one party to another party, I transfer the rights of the contract or the rights and duties of the contract to the other party who is now owning the token. So therefore, for any digital security, I also need a token. I need a token agreement at any time. The token agreement is kind of the heart of the tokenization, because it includes all the rights and duties of these digital security. Then we also need a second document, which is the investment agreement for investors. In the subscription process, as an investor, you have to sign also the investment agreement, the kind of purchase agreement. And then, of course, it's completely similar to the old world. It hasn't changed. We need, for public offerings, prospectus or the EBs in Germany, which have to be handed in at the BaFin. Here, like I just said, we completely standardized the legal wrapper. So now we have once set up all these documents, the tracker certificate, and now we can use this not for only for this underlying. We can exchange the underlying and use any underlying. Have a completely standardized process to tokenize any asset. How does now the tokenization process work? So, like I just said, we have the heart of the tokenization token agreement, which includes all the contract information, which includes all the rights of the issuer and of the investor. We're now hashing this token. We're creating a hash, and this is the legal link to the smart contract. And the smart contract now contains the hash of the document. So this means if somebody is changing the original document, the hash of this document would change. So therefore, I can tell that the real document has been changed by someone, or the other way around. If the hash and the hash on the blockchain and the hash of the original document match, I can be sure that the smart contract, the mathematical contract, is referring to these paper-based document. Here it's very important to say the paper contract is always the highest source of truth still, because if you're going to court on a trial, the judges will also always look at the paper contract, and the smart contract is, let's say, kind of a subset of the paper-based contract. So it's when designing the token, you have to be really careful, because the smart contract and the paper contract have to go hand in hand. And by designing the mathematical contracts or mathematications, it's very important that you also have then an audit on it. So all our smart contracts audited to really see, okay, does this match? And I think in the future we will see more and more also audit companies who serve as a trusted party, that the legal link between these paper and digital contract is in the interest of the investors. Yes. So how does this look like? The subscription is completely digital, so investors can, no matter if they're institutional or retail investors, later can invest completely digitally, remote from home right now. And then as an issuer, in this case Bankhaus Scheich, you have an issuer dashboard where you can control the whitelist of your investors, for example. You can control the rule engine of how digital shares are transferred, where you can handle all the corporate actions if you want to pay out dividends, and where you overview over all the investors. We at Cashlink, like I said, we have to build the smart contract infrastructure, token creation. We have the digital investor subscription. We have the caching studio, which is used to distribute the tokens and mint the tokens into the wallets of Finoa in this case. And the compliance module is also very important, because technically you could transfer the digital security to anyone in the world. And of course it has to comply with AML and KYC regulations and to rules of the security. So some securities are not allowed to be distributed to Americans, but this is also be integrated into the compliance module and the whitelist. And also all our modules are accessible via APIs and white label. So if you're an investment platform or a bank, you can easily integrate our services and also the Finoa services and the Bankhaus Scheich trading market making services via an API or white label solution, so that you can profit from tokenization and digital securities. So now I would hand over to Henrik to move from the issuance process to the post-issuance process.
Yes, thank you very much, Michael. And I already excuse myself. There might be some noise in the background, because that's one of the home office perks. If there's construction workers in the house, they start early in the morning. But I hope it doesn't disturb anyone. So as Michael absolutely said already, we're now moving to the post-issuance phase, where in this specific case of the asset-linked token, the token was directly minted into the accounts and wallets that the participants and investors into the issuance are holding with Finoa. What you see here is a snapshot of how this digital asset account looks like. And next to the digital securities that we're talking here about in the talk, we are also serving, as I said initially, almost traditional crypto assets such as Bitcoin and other cryptocurrencies, which our investors can then all manage out of one platform, as you can see in this picture. Now we can go on with one page, please, Michael. Perfect, thank you. So what do we provide to our users? And as I said in the beginning, this is very much similar to what you are used to in the traditional world, when you have your, I said in German, it's a Wertpapierdepot, it's a custody bank where you hold your securities. And it's a very different technology stack, obviously, because when you try to go with a tokenized digital security, when you try to go to a traditional bank at the moment, they just don't have a technology stack to provide you with the technology as of today. We provide military-grade security, which means that our assets are protected in so-called hardware security modules, which is basically the gold standard of cybersecurity to store the actual assets that you hold with Finoa. And we provide the whole interface to you to then easily manage and access your assets, while we take care of the whole complexity and the technology and the cryptography behind the assets. So that to you very much looks like a traditional asset account where you can manage your assets. Next to custody, the asset account also provides access to so-called staking services, which is a very blockchain and digital asset specific financial instrument, more and more evolving. You can compare it to a fixed income product in the traditional world. And as I initially also tapped into, we are now moving also into the liquidity, where we provide out of the secure custody the access to the liquidity pools in the world through OTC or brokerage platforms, such as with Bankhaus Scheich, and really allow the user of the Finoa digital asset account to then rebalance his portfolio and also to go in and out of crypto and digital securities through fiat or not. We provide the whole infrastructure, as you saw before, in a direct digital asset account to our customers, or the whole infrastructure and functionalities is also API based, where you can plug our technology into existing platforms, be it for issuances, be it for the management, portfolio management platforms, asset managers, you name it. Exactly, Michael, one page further, please. Finoa is currently granted a preliminary crypto asset custody license and iterating right now with the BaFin to comply with the license and to maintain the license, which is a very, let's say, progressive regulation here in Germany. We are very proud that the German regulator is regulating financial instruments or crypto asset as financial instruments here in Germany. This is absolutely globally unique and very much in line with Finoa's strategy to provide regulated and secure financial services for digital assets. So if you are interested in managing your digital assets with a regulated institution, if you're not sure where your private key of maybe your Bitcoin investments or any other digital assets that you invested in is currently safeguarded, and if it's actually safe, we are very happy to provide you with a personal product demo. Because also one question that a lot of our investors and customers are always asking is, when they have their private keys to their assets at home, is what actually happens in a case of an inheritance, because life is always at risk, and with a regulated institution, this is all handled and managed in a absolutely compliant way. So very happy to jump into further discussions after this call. And last but not least, after we now moved into the post-issuance phase, as Michael already tapped into before, Bankhaus Scheich, in this specific case of the asset-linked token and future certificates that we are going to issue, in this case provided both the issuer as well as the market maker to actually provide the liquidity to the tokenized security on a platform that is being developed and will then serve for future digital security issuances as the marketplace to then tap into and trade the digital securities. And I think this is also a very nice bridge to actually bring, because you heard a lot now from the fintech and technology side, and I think now it's time to bring Boris into the conversation to learn much more about how did Bankhaus Scheich, a well-established player in Frankfurt in the traditional financial system, how did they start to tap into digital assets, and how is their experience going, especially also with the regulator and being a regulated institution. I think that's what a lot of the listeners today are interested to hear about. So I would like to bring Boris into the conversation. And I think one of the first questions that I would like to ask is to you, Boris. How did it actually get to the project to tokenize a DAX share? Where did the idea come from, and how did you attack it?
Yeah, thanks a lot. Yeah, how to start? Of course, we're a trading security bank, so we're very closely looking at the Bitcoin volatility in 2017, and and we couldn't believe that such an volatile asset is not regulated at all. So we started looking for a marketplace that we as a bank could trade at, and we couldn't find any. The whole market was like very, very, very low regulated or not regulated at all, and the standards just could not match any institutional investor. So of course we thought, oh, let's build a marketplace, but yeah. We found out that as long as there's no regulation at all by the German authorities, it's just impossible for us as a regulated bank to trade there or to offer that to any of our clients. But since then, we were really fascinated by the technology, because we were looking pretty deeply into it, and we found out that it's like the technology is really superior to what we have in existing system, especially if you look at the post trading, like the settlement process. I mean, we are trading stocks all over the world, and we're buying stocks in Japan, selling them in Frankfurt, like buying them, I don't know, in New York, of course, or in Canada, Australia, everywhere. And the main problem we always have is getting the stocks from the depository of the foreign country to deliver it to our German clients, and that's a real hassle. And we, yeah, like you said, Michael, sometimes it's not weeks, but it's usually we got T+2, so that we're 2 days to deliver the stocks, and in many cases it's just not possible. So we thought there must be like there's a lot of room for improvement, let's put it that way. And yeah, then I think, Michael, we started talking in 2017 for the first time, probably. Yeah. And in 2019, then the BaFin was one of the first regulators who said, okay, we want that market to be regulated. And that was for us at that moment. We thought, okay, we believe in that technology. We want to be one of the first movers, and maybe not, because we are focusing on institutional clients only so far. Our whole business is only with institutional clients. Even if we do pricing on the Frankfurt Stock Exchange, for example, for Telecom and Facebook and like 5,000 shares approximately, we always trade with another bank. So if you go to your online banking and buy a share at Frankfurt Stock Exchange, your bank comes to us and gives us the order, and we do the pricing. But it's not only bank or the B2B2C connection. So we need an environment which is fully compliant. And we thought the crypto itself, the cryptocurrencies, it's probably not the first focus for investors, for institutional investors. Of course, there are some, but they are like really non-regulated, and it's not like really size that's invested in that. It's just, you know, to look at it. And most of the institutional investors we talk to, they just did a very small amount of Bitcoin and so on, because they can't trust the counterparties. That's the main problem. If you do care about some other people's money, you have to be very suspicious of your counterparty, because they hang you, not the guy who runs away with your money or your client's money. So everybody's very careful, and we thought it could be a very smart idea to use not a new asset like the currencies, but to use an existing asset everybody knows and wrap it with a digital technology and mint and token. And yeah, so we ended up with the Telekom Aktie, a very traditional German share, everybody knows, and tokenized that one. Yeah, the feedback was really, really, really great. We had lots of institutional investors who came up and said, okay, that's very interesting. We need to talk. And so the three of us, Hendrik, Michael, and me, we, yeah, since that day, we are very, very busy. And we're building up an OTC platform now where we make it possible to trade digital assets. No matter if it's an existing assets that's just wrapped with a token, or if it's a new share class of an existing, it might be a new IPO, and we're talking to one guy who is thinking of having two share classes, one like old school and one digital share class. That's a possible case. And yeah, of course, like all the other stuff you said, it's a new market. It's you can reach new customers, and yeah, so we're very keen on that project. But the key to the success actually of any issuance is the tradability or the liquidity of the asset. So that's what was the problem of all the ICOs, that despite that it was not really not always very good assets, it's the problem that people can't trade it afterwards. So you're stuck in your asset, and that's exactly not what you expect. If you buy a tradable asset, you want to trade it. So that's our core business, is trading for almost 35 years now. So we just try to transform our core competence in the new world.
Mm-hmm. You touched a lot of very, very good points, on some of which I think it makes sense to deep dive a little bit more. Yeah. You mentioned that you were always looking for like a regulated environment, regulated counterparties. When you then finally decided to do the issuance of the asset-linked certificate, how did you approach the German regulator BaFin, and what was the response? In what sense did they react?
Yeah, as a fully regulated house, we have like a existing relationship, a very close relationship to BaFin and Bundesbank, and so for us, it's like we don't have to wait months and so on for a meeting. We just call and say we've got an idea, we need to talk, and they really like the idea that a fully regulated house like us enters that area. And they, yeah, that was before Corona, so we had a meeting face to face with like people from different divisions by BaFin, and they were really, really interested and very open-minded.
Very good. And I think to wrap it up and then move to the broad audience and the questions that I've seen have been piling up in the WhatsApp chat. Maybe one last question, Boris. The actual, when you took the decision to tokenize an asset-linked certificate based on a DAX share, from like ideation to the actual issuances, how long did it take? Just give the audience a little bit of a feeling how such a project goes along.
Actually, from the final decision, it was really, really fast, because of course we knew each other for a longer period. So we were talking about possible project, but since we said, okay, we're going to start, it was only a few weeks actually. Yeah. It was we needed to talk to BaFin. That was like the most important step. And yeah, we needed to find a setup with Ashurst. They were really fast too. And yeah, then we said, okay, let's do a private placement, no public issuance, so we could be faster. And yeah, so it was just a few weeks.
Mm-hmm. Okay, So thank you very much, Boris.
Yeah.
And I think now I hand it over back to Jan, because I think we have a couple of questions coming from the audience in the WhatsApp group, if I see it right.
We do indeed, yes. Quite a few questions, so let's get started right away. How do you deal with CSD? Is that also digital?
So I think I can take over. In this case, if you're issuing a digital security, there's no CSD involved in the process. So this is one of the major advantages that you was talking about, cutting out the middleman. So in this case, a CSD is not required. Why? Because you're representing the rights of the asset in the token, and then you can transfer the token. BaFin sees it as a security because it's an asset. It's the rights, the economic value of the asset is transferable. Therefore, BaFin says it's a security. But from the German Depotgesetz, it's not a security. So in this case, I think the question is more how will be the role of CSD if we have completely transformed capital markets? If we have capital markets 2.0, how will CSD be part of it? I think this is a lot to do with regulation, because the question is how will we regulate the security tokens in the future, and which licenses do we need for issuing and storing security tokens? We now have the new crypto Verwahrgesetz in Germany since the beginning of this year, and there's more regulation to come. And I think this is a great opportunity for Germany to gain a competitive advantage over other jurisdictions, because we started with having the crypto Verwahrgesetz as one of the first jurisdictions in the world to regulate, in this case, the custody, and now it's more about regulating all the other aspects. So I hope that the regulators, and especially the government in this case, will regulate it in a way that gives us a competitive advantage over other jurisdictions and allowing innovation to happen in Germany.
Nice.
Absolutely, regulation is the key to success of anything in that market.
Okay. Even though it is faster than normal traditional banking systems, the settlement is still not instant. With Bitcoins, for a good confirmation, we would need 1 hour, on Ethereum, 10 minutes. Or are they talking about a different blockchain?
That's correct. So when we're talking about instant settlement, we're describing how will capital markets look like in the future. Right now we have the old system and we have the capital markets 2.0 system. And we're not transforming or changing the system overnight, because transforming capital markets infrastructure, the security infrastructure, will not happen overnight. So we'll have a long period where where we have the old system and the new system are existing in parallel, and we'll have a lot of interdependencies between each other. So that's why this is the first step. And second is, of course, the technical infrastructure of the capital markets 2.0 is also still at the beginning. Although we have now the first real use cases, we're still at the beginning. And that's why you're totally right. Right now, if you're talking about Ethereum, it's not instant, but it's still, if you compare, it's minutes compared to days. So we have a major improvement in the settlement. And when we have Euro on chain, we have the reduced counterparty risk, but the technology will improve and improve and improve. And that's why at some point we probably have an instant settlement. And right now it's a major improvement in settlement.
Nice.
Yeah, and I think what's also to add on this is, yes, we see around like 10-15 minutes sometimes of transaction duration now on the Ethereum network, which is partly actually because it's so popular at the moment. It's kind of suffering under its own popularity, which already shows how much actual traction the network is becoming. And then obviously we see, as Michael said, more and more technical improvement on that end. But I think it's also still important to say the AVI, the communication that an asset is moving from one wallet to another, is instant. And yes, of course, then you have to wait for the confirmation of that transaction, but you have it already, like you see it's incoming, and then it takes those 10-15 minutes to actually settle into the new wallet. And maybe also to mention that we're talking about moving hundreds of thousands, if not millions of worth of US dollar or euro. And then you actually pay for that transaction, you pay between 5 and 10 euro cents, which is also in comparison to the traditional financial system when moving assets from A to B, where you talk about euros in most of the cases, an absolute innovation.
Mm-hmm. Is the connection between the layers token and the underlying share made by a real world contract?
Yes, that's correct. So like I said, the highest source of truth is still a real world contract. This is the highest source of truth. So this is the link. So we have a real document, which is not signed on paper, which is signed digitally, but it's a real world contract.
Mm-hmm. 1 second, I just got that. So to all the others who might have joined later, just join the WhatsApp group. The link is in the Eventbrite email you received at the start of the event, and then you could post your comments there. And if we don't get through all the questions, Michael, Boris, and Hendrik are all in the chat, so the conversation will go on after 10 a.m. this morning. So next question. By whom and how is the token managed after issuance? For example, corporate actions and trading.
Yeah, I think I can take that question. In this case, in the private placement that we discussed here, the actual asset is stored and safeguarded within the custody infrastructure of Finoa, where the user or our customer, the investor himself, is provided the access and the management of the asset. What does that mean in regard to corporate actions? In this case, we do not have specific corporate actions that we have to comply with. But if you, let's say, we take in a security token or tokenized digital security where corporate actions apply, then it is indeed the responsibility of the custodian in this case to provide the investor with the information, just as you used to it as well in the asset servicing and information of traditional financial instruments, to then, for example, be it executing a voting right or if necessary, claiming dividends, although the actual claiming of dividends in a token-based is absolutely automated, or it's at least possible to absolutely automate it, and etc. So we as Finoa provide our customers with all the information they need to then, within our platform, manage their investment without having to compromise or without having to worry about the actual security of the asset, as it's never leaving the actual secure and protected infrastructure that Finoa provides.
Mm. Are the tokens centralized in a Finoa address, or are they distributed to the client's addresses?
They are distributed to segregated addresses and wallets of the investors into the issuance.
Mm. Can you share an example for such a token agreement? What would it look like?
What would it look like? It's actually a long contract. Also, it's a long contract. It depends on the asset. So you have a contract, and the contract defines what are the roles of the investors and what is the role of the issuer, and what are the rights and duties of issuers and investors. And for example, it contains doesn't give dividend payments. It contains which economically, how can you economic profit from the security. It also contains all the risks, the risks and warranties. It contains the way it's interacting with the smart contract. So it has it has a lot of elements which are common in such contracts in the real world. Then it has some aspects which refer to the smart contract. Then it has some aspects that are asset related. So for example, are you giving dividend payments or not? Do you have voting rights or not? Do you have what about secondary trading? Are they allowed? Do you have lockup periods and so on? So all the data and information about the asset. Yeah, and then these rules, which are defined in the token agreement, are transformed into smart contracts on a technical level, and therefore there are some people who say, okay, let's put everything in the smart contract. Our opinion is more to look at any rule and then decide, do we want to have it on chain within the smart contract, or do we want to leave it in the real world paper contract? And this is also where the lawyers have different opinions. Because if you have a smart contract and a paper contract, which is leading, like I said, it's always at the end, it's still the paper-based leading, but the smart contract is performing the actions. And it's very important to design wisely both contracts.
Mm-hmm. All right. How did Telecom react to the tokenization of its equity?
Actually, very positive. Of course, we were asking them. I mean, we did not, but that was just because we are kind. No, but technically, we didn't need to ask because it's our asset, the telecom stocks. You know, the underlying was our asset, so it was not necessary to ask. But of course, we were asking, especially because we are responsible of the telecom price share in Frankfurt on the Frankfurt Stock Exchange. So, so of course we talked to them, and yeah, we're still talking. They liked the project they liked it very much, and we're talking about other project we might do together.
Yeah.
So yeah. So they really liked it.
Nice,
I mean, they're a tech company as well, so at least they have some techies in their company.
Tech company have some techies, yeah.
Yeah.
All right, nice. There's still too many questions, so again, maybe Michael, Boris, and Hendrik go in the chat and answer them after the conversation. I'll read out one more though. Can you share more about the atomicity of those asset transfer, technically speaking?
Can you repeat the question?
Okay. Yeah.
Oh, sorry.
Yeah.
Sorry.
Can you share more about the atomicity of those asset transfers?
Yeah. So, like I said, it's still the beginning of the technical infrastructure. But what people are referring very often is a so-called atomic swap. Let's call it atomic swap. And so if you have a transfer in this case, which is meaning, okay, you have what you want to achieve is the following situation. So you have an asset here and you have another asset here. So right now, we are not, or in most of the cases, we are not trading asset versus asset. We're trading asset versus money, and then we're trading money versus asset. But if this is all completely efficient, it just doesn't even matter if it's money or if it's an asset, because if you have the euro on chain, which China already did by distributing their own digital central bank currency, the money is just another asset. So we have assets like real estate or stocks or private public, and then we have money assets, a stable coin and the euro on chain. And then if you transfer one asset to another asset, it's like the one asset goes to this address, and at this kind of same moment, the wallet goes to the other address. So, so that's what you want to achieve, is that an asset can't be at the same time at the same place. So you switch it at the same time, and therefore you can dramatically improve the delivery versus payment process, because you don't need any counterparty in between. Yeah, you remove the counterparty risk in this case. So the delivery and payment process gets way more easier. And that's what you want to achieve. And I think it's very interesting because if you have euro on chain and if you have any asset on chain, you can trade against any asset. You just need some pricing mechanism. So how do I transform it from a price mechanism? And that's also where you need players like Bankhaus Scheich, who can calculate the prices between the assets.
All right, wonderful. Thanks a lot for all the questions. Thanks to Hendrik, Boris, and Michael for your insights. I hope to see you on another panel in the near future. I hope you enjoyed it as well. And with that, I would say we close the session. I wish you a productive week, which is basically just starting today. And yeah, you're all in the chat. Let's keep the conversation going outside of these events as well. Thanks a lot.
Perfect. Thank you very much.
Bye.
Thank you. Bye-bye.